Hey there, side hustlers and small business warriors. Are you getting a 1099 for your side gig? If so, did you know that your side gig might be costing you more in taxes than you think? As a matter of fact, if you are self-employed, IRS double taxes your profit. Let's dive into the world of self-employment taxes and uncover how to keep more of your hard-earned money in your pocket and pay less to IRS. We all know that everyone has to pay income tax, including businesses. There's no way getting around that with Uncle Sam. But here's something you didn't know. When you're self-employed, you're responsible for paying both the employer and employee portions of Social Security and Medicare taxes, totaling a whopping 15.3% of your net earnings. That's on top of your regular income tax. Compare that to a W-2 employed person who pays only half of that self-employment tax. This means you're effectively being double taxed, once through income tax and again through self-employment tax. It's like being charged twice for the same service. So what can you do to avoid this double taxation? There are a couple options. If your profits from your side hustle are lower than what you would make from a W-2 job, which is typically below $50,000 per year, then you should really focus on maximizing your deductions. So you need to track all business-related expenses because IRS allows you to take some hidden deduction that could bring your taxable income to zero. For example, if you work from home, you may qualify for the home office deduction. This includes a portion of your rent or mortgage, utilities, internet, and more. Even a small home office can save you $1,000 to $2,000 a year. Similarly, if you use your car for work, you may qualify for the use of vehicle deduction. In 2025, the IRS allows 70 cents per mile. So if you drove 5,000 business miles, that's over $3,000 in deductions. So track your mileage. And my favorite deduction is the Section 179 deduction. If you make a big investment like a computer, furniture, software, equipment, or even a heavier vehicle, you can deduct the entire cost in the year you buy it, effectively bringing your taxable income significantly down. So every deduction you can find reduces your taxable income, saving you money. Now, if you are a more serious side hustler or maybe even a full-time freelancer, and you're bringing in more than $50,000 in profit in a year, you might want to consider forming an LLC and electing to be taxed as an S-corp. You can make that election by filing a Form 2553 with the IRS. This allows you to pay yourself a reasonable salary as an employee and take the remaining profits as an owner's distribution, which aren't subject to self-employment tax. For example, you make $100,000 from your business. Pay yourself a $50,000 salary and pay self-employment tax on only that amount. Take the remaining $50,000 as distributions, and there's no self-employment tax on it. This would mean that you only pay $7,650 in self-employment taxes compared to $15,300 if you don't elect as an S-corp. This could save you more than $7,000 in taxes. Now keep in mind, forming an LLC does come with setup fees, annual renewals, and a bit more paperwork. On top of that, if you elect an S-corp, you also need maintained payroll, separate bookkeeping, and a separate tax return. So yes, you can save thousands, but only if you're making at least $50,000 in net income. If you're still side hustling under $50,000, the costs might outweigh the benefits, at least for now. So on a final note, remember, the key is to understand your tax obligations and plan accordingly. Whether it's restructuring your business or keeping meticulous records, taking proactive steps can lead to significant savings. Don't let taxes eat up your side hustle profits. Do you want a step-by-step guide on how to form an LLC or file S-corp paperwork? Drop a comment below. I might make that my next video. Don't forget to like and subscribe.